In this economy, it seems safe to say that everyone is concerned about wealth, and Eric Heckman has written a book entitled Worry Less Wealth for those making over $200,000 a year or who have more than $500,000 in assets. Eric, welcome. Nice to have you here.
Thanks a lot for having me on.
One of the things that you wanted to talk about, and the reason you targeted the book for those in that financial category, because the financial strategies have changed due to the economy. What do you consider when someone says to you, okay, I have my assets, will I have enough to retire? That's one of the principal concerns. How should someone go about assessing the three most important steps to take?
Well, I mean, one thing is just saving enough. I mean, putting away 20% of your income, if you can keep doing that on an ongoing basis, you're going to be fine in the end. May not be Bill Gates rich, but you'll at least have some money. So that's the first one, is paying yourself first.
And that's if you have income coming in regularly from a job or also from investments, then?
Well, yeah, mainly just the income while you're working, right?
Okay.
You know, and then, but also not taking too much risk. In the 80s and 90s, the stock market just went crazy. It has never happened again, or before. It probably won't ever happen again. It was about 1,000% return from 1982 to 2000.
Incredible.
The largest period before that was about 100%. So people got kind of spoiled and got their expectations a little overly inflated. So having some money that's safe, that's guaranteed. There's a lot of new products out there that have a lot better return potentials now. So that's one thing too, is a little bit more education.
Right, because so many people were burned and changed their retirement plans forever based on the stock market crash. So when it comes to 401ks, what are your thoughts about, and Roths, and are there particular things that people should look for, or definitely work with a financial advisor, just assume you put money in there and it's all going to be fine? Yeah,
I mean, you definitely want to pay attention. I find a lot of people actually fund it when they first start a job, and then they forget about it, which is totally wrong. Most companies now have an automatic reallocation feature where you can say, every year rebalance it, meaning if I wanted 20% in this fund and now it's grown to 25, it'll sell off some of that, lock in some of your gains and put it in the other spots. So that can help. Only drawback with that area with 401ks is there's no guaranteed investments. Very few 401ks have anything that's guaranteed other than a money market that doesn't pay much. So that's one thing that they're starting to finally get back to. Hopefully they will. In terms of Roth though, Roth IRAs and Roth 401ks, which a lot of people don't realize there are, those are really critical because everybody knows that the taxes right now, the government situation is not very good.
Yes.
And with a $15 trillion deficit that we have, debt, we've got a lot to work on in trying to pay that money back. So if you have a lot of money exposed to the government at retirement, it may not be as nice a retirement as you planned if they raise the rates.
Yes.
So that's another part, is not only investment, but also tax, diversification.
And one of the things that you talk about in here as well, you mentioned risk tolerance. There's a questionnaire, and you advise, and you have that on your website, which we will give as well. And you want people to really think about how can you worry less when it comes to your wealth. So what do you look for if someone is looking for advice who is very risk aversive? What's the safest path, if there is such a thing, when it comes to that?
Yeah, it's definitely tough because everybody gets scared, and 2008 happened, and when that huge drop.
Yes.
And so, I mean, one thing is having something like automatic reallocation. Nobody ever wants to sell because it's going to keep going up, and then when it goes down, everybody wants to bail out. So having that automatic reallocation, that can be helpful. Having just money going in automatically. If you're really conservative, just making sure you're using one of those questionnaires to find out, are you really invested the way that you feel comfortable with? Because the worst thing to do is think you're one way, and then when the market crashes, then you jump out, and then you locked in all these losses, and then you never get that money back once you've done that.
Yeah.
So that's one of the big things, is making sure your risk tolerance matches what you actually are investing in.
Right. And when it comes to investments, just in general, this is a strange new world. We've dealt with, like you said, 2008, the continual fallout of that. We have the little signs of some hope within the economy. But What are you seeing in terms of your forecasting for the future? Are you pessimistic, optimistic? Where are you?
I mean, I think we're definitely past the really bad stuff. It's slow. Governments are going to take a long time to get back, and they've still got a lot of things to fix. In terms of taxes, who knows? That's the biggest danger right now, is the taxes expire at the end of this year, and with an election year and a presidential election year on top of that, who knows what they're going to do? So that leaves a lot of uncertainties. So I think in probably 2 or 3 years, when there's less uncertainty, there's going to be a lot better, a lot better returns in the market, a lot steadier returns. Hopefully, once interest rates go back up, it's not good if you owe money, so maybe a good time to buy a house. But if as interest rates go up, that'll help a lot of people, because right now, if you put money in the bank, you don't you get pennies on the dollar, if even that, and so that's a tough thing, especially for people who are more conservative. There are some strategies, but still, they're not going to be huge money makers. So
at this point,
you do have to.
Well, you have lots of good strategies in here, and thank you so much for joining us. And we'll have to have you back to talk about what happens if there is a revival of the millionaire tax concerns and initiatives going forward, as well as additional strategies with some of your clients who've been very well pleased with your advice. So thank you so much.
Yeah, thanks for having me.
And if you'd like to check out the book, highly recommend it, Worry Less Wealth by Eric Heckman. And that's our show. I'm Janice Edwards. Thank you for joining us, and thank you for putting your signature on Silicon Valley. We look forward to seeing you next time.